Hello, dear traders. My name is Clara, and these are the main trading ideas for the current session. First of all, let's discuss the dollar. The United States dollar is trading in a mixed environment, as market participants continue to assess the consequences of the longest federal government shutdown in the history of the United States, which has already increased the national debt by $620 billion United States dollars and delayed the release of essential economic statistics. This lack of official data limits the dollar's ability to attract aggressive buyers, as traders remain cautious about the true state of the United States economy. Officials from the Federal Reserve System delivered several important comments shaping market expectations. Christopher Waller, a member of the Board of Governors of the Federal Reserve System, stated that the central bank should consider lowering interest rates at the December meeting due to a weakening labor market and a sharp slowdown in hiring. Philip Jefferson, vice chair of the Federal Reserve System, supported this view, noting that the United States labor market is currently sluggish as companies hesitate to hire amid policy changes and the growing use of artificial intelligence as a potential replacement for new workers. As a result, futures linked to the federal funds rate now price in only a 43% probability of a 25 basis point rate cut in December, down from 62% a week earlier. Meanwhile, representatives of the administration of President Donald Trump continue their daily media campaign to calm investors. Kevin Hassett and Scott Bessent appear almost every weekday on major television networks, reassuring the public that everything is very good, even as mixed economic signals persist. Despite this, traders remain cautious, given the slowdown in economic momentum and uncertainty surrounding delayed data releases. In the short term, all attention is on the upcoming Non-Farm Payrolls report expected on Thursday. Economists forecast the addition of approximately 50,000 new jobs in September, following only 22,000 in August. The unemployment rate is projected at 4.3%. A weaker-than-expected report could trigger broad selling pressure on the United States dollar, while a stronger report could support its recovery. Additionally, speeches from several Federal Reserve officials later this week, including Michael Barr and Thomas Barkin, may increase volatility. Any hawkish comments could provide temporary support for the dollar, particularly given the lack of fresh macroeconomic data caused by the government shutdown. Despite mixed signals and cautious sentiment, the structure of the market still favors a moderate upward trend for the United States dollar in the near term. The slowing economy and uncertainty cap aggressive moves, but the dollar retains potential for cautious gains as traders digest upcoming labor data and Federal Reserve commentary. Next, let's move on to the yen. The Japanese yen continues to weaken against the United States dollar, reaching its lowest level since February. This depreciation is mainly driven by Prime Minister Sanae Takaichi's plans to reduce taxes in order to stimulate consumption, which has raised concerns about the long-term fiscal stability of the government. In addition, weak gross domestic product data released on Monday reinforces expectations that the Bank of Japan may delay any interest rate increases, further contributing to yen weakness. At the same time, verbal intervention by Finance Minister Satsuki Katayama and a general global risk-off sentiment prevent aggressive selling of the Japanese yen. The United States dollar is supported by a relatively less dovish tone from the Federal Reserve System of the United States, which is a positive factor for the United States dollar to Japanese yen currency pair. Market participants are closely monitoring upcoming releases, including the minutes of the Federal Open Market Committee of the Federal Reserve System of the United States and the delayed Non-Farm Payroll report of the United States. Overall, the market structure favors a cautious continuation of the United States dollar's strength against the Japanese yen, but volatility remains elevated due to potential policy interventions and delays in the release of economic data. So, these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.